Hello everyone and welcome to BISP Solutions. I am CA Sanjana Mishra, working as the lead functional consultant at BISP Solutions. I specialize in synthesizing and analyzing the financial data. I have 7 years of experience in NetSuite, HFM, FCCS. BISP Solutions is a tech company providing technological solutions across the globe. We have a far-flung proficiency in end-to-end implementation and support. Today, we'll be looking at fixed assets impairment and its impact on the financial statements of the organization. Before understanding what is fixed assets impairment, let us just have a look at what is impairment actually. So, impairment is the state of being diminished, weakened, or damaged. Now, what is fixed assets impairment or an asset impairment? Asset impairment is commonly used to describe the reduction into the recoverable amount of the asset. Now, that reduction can occur due to any change into the legal or the economic environment of the organization or a casualty loss from unforeseen devastation. So what is asset impairment in terms of calculation? So when the carrying value of the asset into the books of accounts of the organization exceeds the recoverable amount, then the difference between the two is known as the impairment loss. Impairment of assets is covered by IAS 36. So IAS 36, impairment of assets, seeks to ensure that an entity's assets are not carried at more than their recoverable amount, with an exception of goodwill and certain intangible assets for which an annual impairment test is required. Entities are required to conduct impairment tests where there is an indication of impairment of an asset. So, impairment applies to land, building, machinery, equipments, investment property if carried at cost, and of course, goodwill and intangible assets because their annual impairment tests are required for goodwill and intangible assets. Now, what is the impact of my impairment losses that has occurred on the financial statements of the organization? The first impact is into the income statement, where the impairment losses are recognized and thereby they reduce the net profit or the net income of the organization for the period. And into the balance sheet, they form a part of the calculation for the net assets that form a part of my balance sheet for the purpose of reporting for that particular period. Now, let us just look at a very simple example of what are impairment of assets and how do we actually calculate it and how do they actually look for the purpose of calculation. So there is a machinery, there is an organization. The machinery is purchased by the organization. That means the organization invested $5 lakh into the machinery on on 1st of January 2015. The useful life of the machinery is 5 years, and the salvage value is nil, and hence the depreciation is SLM on SLM basis. The depreciation is $1 lakh per year. So on 31st of December 2015, 16, and 17. Let's not take 2018 into consideration as of now. For the first 3 years, the machinery value is $5 lakh and accumulated depreciation is deducted from that, uh, the book value, and the net value of the asset forms the part of my balance sheet for the purpose of reporting for that period. So from the first year is 4 lakh, then it is 3 lakh, and for the consecutive years, it is reduced by depreciation every year. Now, on 1st of January 2018, a new machine technology is introduced into the industry, due to which the existing machines, though still useful, but their importance shall decrease into the coming years. And the industry experts are of the opinion that the existing machineries may become obsolete in about 3 to 4 years down the line. Based on these new developments, the management did an impairment test and discovered the current recoverable amount of the machinery, which is now $1,70,000. Hence, as you can see, the amount as on 1st of January 2018, because on 31st of December 2017 is 2 lakhs. So the same is the opening value of the machinery on 1st of January 2018. On 1st of January 2018, the value of the machinery is $2 lakh. But due to the changes into the economic environment of the organization, the recoverable amount of the machinery is now $1,70,000, and hence there is an impairment loss that has to be recorded for the purpose of reporting. And the impairment loss is $30,000. That is $2 lakh is the value as on 1st of January 2018, but the recoverable amount now is $1,70,000. Hence, the impairment loss that needs to be recorded is $30,000. Now, this $30,000 will form a part of the income statement of the current year for the purpose of reporting. And also, this is going to be a part for the calculation of the net value of the asset that shall be recorded for the purpose of reporting into the balance sheet. This is for the balance sheet calculation. Now, when the recoverable amount of the machinery has reduced, the depreciation is also going to be simultaneously reduced. The reason being, now the recoverable amount is $1,70,000. The estimated life now is only 2 years left, because 3 years has been completed. Only 2 years of estimated life is left as of 1st of January 2018. So the depreciation for 2018 and 2019 will be $1,70,000 divided by 2 years, that is 2018 and 19. So the depreciation is also going to be similar simultaneously be reduced. Hence, for the purpose of reporting, on 31st of December 2018, the value of the asset so remaining is $85,000. The calculation is 5 lakh, which is the book value of the asset. Accumulated depreciation is 3 lakh up till past year, and 85,000 for the current year. So the accumulated depreciation is 3,85,000. Impairment loss that has resulted is 30,000, and the net value of the asset for the purpose of 31st of December 2018 is $85,000. Hence, on 1st of January 2019, the value of the asset will be uh, only left for the value of the asset will only be left as $85,000. Accumulated depreciation, or the depreciation for the year, will be 85,000, and the value of the asset remaining will be zero, because 85,000 is the balance of the asset that is remaining. 85,000 will be the depreciation for the year, and on 31st of December 2019, the value will be zero. The balance account for the machinery will be nil. So this is how impairment of assets actually play a role into the calculation of the net value of the asset, and also become a part of the income statement. This $30,000 will become a part of the income statement for the year ending 31st of December 2018, thereby reducing the net profit of the organization. So this is how my impairment losses actually result or become a part of my organization's financial statements, and impairment losses actually affect the values of the assets of the organization. In case of any queries or consultation, please just do get back to us at www.bispsolutions.com, where we would be happy to help you. Thank you so much.